Good morning to you.
Good morning to you.
So glad we have you. Let's get right into it. Our first question here says, quote, I got a call from my bank offering to refinance my mortgage. I wasn't interested, but asked about a home equity line of credit to make some repairs. The banker offered me a signature loan with my 401k. As proof, I could repay. Sounds like a bad idea. What do you think?
Well, I think it's a really bad idea. Not only that, I think it's actually illegal because you cannot actually use your 401k or your IRA as collateral against any kind of loan. This is a little bit of two-step. This is, oh, you want a home equity line of credit? Well, how about if we just give you a signature loan, which means it's really just as good as your signature. And if you don't repay it, well, then, you know, the bank will have to figure out, or the credit union will have to figure out how they're going to get the money back from you. Listen, it's a really bad idea to try and take any money, to ever use your 401k as collateral, and try to never take a loan out of your 401k, though about 30% of us do that on a yearly basis.
Not a good idea.
Bad idea. Put the money in a 401k and leave your hands off it. The greatest single piece of advice to eventually have some money when you retire.
Yeah, that is good advice. Let's go to our next question here because I think this is a good one. It says, quote, I have 18 months left on my car loan and I'd like to pay it off early, but my lender says the balance will be the same whether I pay it off now or in 18 months. Does that make sense to you?
Do you start to see a theme going on here with the banks?
Yes.
Yeah.
Trying to make some money.
Yeah, the banks are trying to make money, and you're absolutely right, Jessica. They're trying to do this in a low-interest market, which is very tough. Look, if you have what's called an add-on interest loan, that means the car costs 20 grand, the bank adds on $2,000 of interest, and they don't care when you pay it off. You're going to pay $22,000 for that car. So if it doesn't matter when you pay it off, my suggestion is you leave that rest of the money in your bank account, in your in your investment account, and then someday when you finish paying it off, you've paid it off. Don't be in a rush. Don't be in a rush.
What's the point?
What's the point? Relax.
I agree with that. Okay, do we have another question up here?
Well, we got the Simply Money tips
of the week.
Day.
Okay, this is good because this is for someone, if you have a smartphone, this is a good one right here.
All right, well, I don't know how, see, but these smartphones are only as smart as when you update them, okay?
Mine needs to be updated.
I'm an Apple Pay kind of person,
okay?
Yeah, and when you get the updates, updated, because these days this is the place where thieves are going to go to try and steal data, information, get all of your stuff. And every time you get an update, that's because Apple or Android or whoever it is, Google, is saying, you know what, this is how this thing can get hacked. Update this so you can be safe. So don't look at those things and go, oh yeah, I'll get to it next week. Do it now.